of the global campaign that was celebrated throughout October and November, promoted by IOSCO to raise awareness about the importance of investor education and protection. As DCSX, we are happy that we could organize this virtual event. The initial idea at the beginning of the year was to organize a live event, but with the unfortunate development we had this year, this was not possible anymore. Nevertheless, we are happy that we have found several participants in the financial industry here on the island that will share with you today interesting information and experiences in our local market. From the DCSX, we will have Mr. Reiner Reumer, who will go over some general considerations and benefits for companies and investors on our exchange, while Diana Intriago will present the listing process on the exchange. Mr. Errol Kova from the Central Bank of Curaçao and Sint Maarten will discuss the importance of a developed capital market and the role the central bank has in the development of this market. This will be followed by two business case discussions presented by Bharat Bashwani and Justus Martens. At the end of the program, there will be a chance for questions, and I hope you all enjoy the event. Renee?
Thank you, Abed. Give me 1 second, and I'll share my screen with you guys. And yep. All right. Thank you again, Abed, for the introduction. And already now I want to thank the other speakers also. And of course, not to forget everyone who has shown interest and has signed up. The intention is clear. We want to, from time to time, as the DCSX, we want to be in contact with, let's say, the market, with the people in Curaçao, with the businesses, with potential investors, because we think it's a known fact that in Curaçao there is still a lot of lack of information on what an exchange is, what it does, etc., etc. Abed has very briefly referred to the topics that I will cover today, and those are indeed mostly general considerations. But within those general considerations, I thought it was probably a good idea to look at a couple of things, which is, some benefits and opportunities for both businesses, but also for the investors. Clearly, it's a chicken and egg game. Without businesses understanding the game, there will be no investors. And on the other hand, with no investors for businesses, it doesn't make much sense to try to attract capital through an exchange like the DCSX. We'll also look at a few responsibilities that this whole process will bring with it. Have some general considerations on what it is to list on an exchange and investing in listed securities. What has it been? How does it look nowadays? And where do I think we will be going, or where would I personally love to see things go? If we start at the beginning, I think it's a good idea if we mention what our mission is. The DCSX, the Dutch Caribbean Securities Exchange, has a mission. And the mission is that we want to create prosperity by connecting investment opportunities to investors. Sounds pretty simple, but as I said, it's a chicken and egg game, and thus it is not very simple. A very, very often encountered misconception or misunderstanding is that, and it's funny because as a matter of fact, even yesterday, a friend of mine who is a business person and well-educated but doesn't know how this works. So he asked me, okay, but if I try to do something through you guys, how much money can I get? In other words, there is still a perception with a lot of people, even business people, that the Securities Exchange is some sort of like a bank. And we have to realize that that is definitely not the case. The Securities Exchange is not a bank. We are a marketplace. And we'll get back to that in a moment. We are a marketplace, and we are a tool within the marketplace that you need to create a really lively, vibrant capital market. Without an exchange where businesses that need to attract capital meet investors to attract that capital, you can never ever create a vibrant capital market. And we'll see at the end of the presentation also that a vibrant capital market is an absolute condition to be able to have certain economic growth. So if we deal with that, with the misconception, you know, that an exchange is a bank, which it is not, we have to ask ourselves how that comes. And that has to do, of course, with the fact that also the DCSX, the Securities Exchange, is a financial intermediary. Now, what do we mean with a financial intermediary? Basically, a financial intermediary is some sort of a financial middleman who stands in between two parties to arrange a deal between those two parties. Let's put it that way. And yes, one of the most common financial intermediaries, a financial middleman, is of course the banking industry. Banks, we all know, attract capital from their clients, from their account holders, savings accounts, current accounts, and others. They attract funds, and then they turn around and they lend out those funds to businesses, to the market, with the understanding that the lending is done in name of the bank and not in name of the savings, the people with the savings or the people with the current account, funding accounts. Okay, so the risk is really what differentiates the Securities Exchange from a banking institution. A banking institution runs the risk that if this money is not repaid, it will suffer a loss, it being the bank itself. On a Securities Exchange, what happens is that a business will attract capital from investors, so not from savers, but from investors. And if the thing goes haywire, then it's the investors that lose their money, not the Securities Exchange. The Securities Exchange is nothing more but, again, a marketplace, an intermediary. Another big difference with Securities Exchange is that a Securities Exchange only services basically the business community. If an individual, a natural person wants to borrow funds to buy a car, that's not done through a Securities Exchange. If a business wants to attract capital to expand or to build something, you know, a new building or even a startup, whatever, that's what a Securities Exchange is for. So Securities Exchange serves as the marketplace where investors go to a business and not to individual investors. Individual borrowers, like people who want to buy a car. If you look at these differences, then one of the next questions that comes is, okay, but how does it work? Who decides if and how much money I get? With the bank, guys, it's very easy. The bank has a credit committee. The credit committee looks at the borrower, in this case the business, and then decides on the basis of a couple of conditions, of course, if that borrower is credit worthy, and if so, the loan will be approved. In the case of an exchange, of a Securities Exchange, there is no credit committee. There is the public. And we'll get later in more details on how that works. As a matter of fact, Diana will show you guys how the actual listing process goes and what you have to watch for. But so it's important that we realize ourselves that in the case of a Securities Exchange, it's the public in the end who decides whether they, on an individual basis, are interested in providing capital to the specific business. A couple of other big differences where we will not get into at this moment, at least not into much detail, is of course the issue of collateral, the pricing, and when with pricing I mean what the borrower in the end will have to pay to the lenders. In the case of a bank, of course, the lender is the bank, and the bank basically decides what it's going to charge you given your credit risk status. And in the case of a securities exchange, we of course have a different situation because there the market in the end will decide what is reasonable, what they are willing to give their money out for towards the business, and what they want in return as far as interest is concerned. So we're talking about a very big difference between banks and the securities exchange, the securities market. When we talk about the securities exchange and investors who are investing into businesses, we're consequently really talking about investments and not about saving. And I couldn't help but want to quote a very famous, and everybody who has studied economics knows this gentleman, because his books are still, his book, as a matter of fact, which is called Economics, is still the worldwide, the primary book for any economy student when they first enroll into their colleges, Mr. Paul Samuelson. And he says, which I think really typifies it very well, and that is, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. So having stated that, and just with a funny quote, let's look at some benefits and opportunities for both businesses and investors. And you can see them on the screen, of course, a couple of bullet points. If a business wants to attract capital, one of the things it has to do is it has to be smart about how it wants to do that. In other words, it has to decide very clearly for itself how much it needs, what it needs it for, and how it thinks that it's going to repay the funds that it is getting. And when I say this, and that's the bullet point 2 basically, it's consequently extremely important for a company if they want to attract capital through a securities exchange from the market, to decide what is best for its own, and or what the greatest interest will be from the investor's side. And there, the basic decision is to make a difference between an equity financing or a bond financing. In other words, if the company decides that it prefers to borrow money, pay interest on it for whatever 3 to 5 years, it should go through a bond issue. While if it says, well, you know what, no, I want to look for investors who are really on my side when it comes to bearing the final risk of the business, then of course you can go through the issuance of shares of equity. And unfortunately, I think a lot of businesses never ask themselves that question, and it's a pity. And it has to do, I think, for a big portion with the fact that in our community, and not only in our community, but even in the whole Latin American area, we are very bank-centered. In other words, the moment a business wants to take a step and needs funds, it immediately runs to a bank, gets a loan, and starts moving. There is not this pause where the business asks itself, okay, what's the best for me? Should I indeed go and lend it, borrow the monies from a bank? Should I borrow it from the public? Or should I look for equity investors? Or maybe I should do both. And I mentioned it here as hybrid securities. Again, the time we have today is too short to get into details, but don't forget, please, as a business, that there is also a lot of possibilities to combine an equity issuance with a bond issuance, and you need to attract capital. If we look at this whole process, so again, a business needing capital, going to the market, getting it, investors investing in that business. Now imagine you're the investor and you've invested in this business and it's nice, it's a bond for 3 years or for 5 years, or you've bought an equity position, whatever, for 10,000 guilders. And after a year, you're like, you know what, I actually need my money to do something else with it. What is the problem there? That normally, if you have lent out your money to somebody, let's say in a private placement, directly, you know, as a person to the business directly, then of course you have a, you have a problem that you cannot get your money back very soon. And that's of course the additional advantage of an exchange, and that is what we call liquidity. In other words, all the investors, if they want to get rid of their investment for whatever reason, either because they need the money or because they want to use the money to invest in something different, or because they think, hey, you know what, this thing, I can now sell it at a nice profit on the market. All you do is you issue an order to sell your position, and with a bit of luck, there will be a buyer and you make some profit. My last point here on this slide before we continue is, I can't get I can't get wrap around yet the exact figure, but we would, and we will publish this. In Curacao, there is a fairly high savings pool, and what we're going to try to find out is exactly how big it is, because that will give you a chance to, let's say, calculate more or less if from that savings pool we can get whatever 10 to 50% to actively jump into our local business community by financing either through equity or bonds. You could get a very nice economic growth, you know, a leveraged situation. On the next slide, a few quick remarks. Don't be a thief of your own wallet. And when I say this, I mean both the business and the investor. You have, as a business, you have to realize that, especially in nowadays world, you will constantly have to upgrade yourself. You have to grow and upgrade, both on your corporate issues, but also on your financial governance. And while, of course, when you finance through a bank, you also have to do certain reporting and file your results and what have you. When you have borrowed funds from the public, the DCSX, the Securities Exchange, will demand from you that on a certain regular time frame, you inform all your investors how you are doing as a business. That's a duty that you have. There's very funny discussions going on at this moment. A lot of you guys know about the ESG investments, you know, the environmental, social, and governance investments. And in the United States, they've just changed the legislation again, in the sense that businesses, while they have to recognize that you have to be also environmentally friendly, etc., the environmentally friendliness or the socialness or the governance issue should not be the most important thing. The most important thing is you have to make profits for your shareholders. Very funny that this has happened right now or very recently under the still sitting president in the US, but we'll see how that works. But in general, you know, as a company, you have to make sure that your governance on several levels is good. When I say don't be a thief of your own wallet, I also mean that for Curacao as a whole. And when I say that, what do I mean with that? And I put here a bullet pointed example of Jamaica. Jamaica has decided that in order to get the capital market moving, they started to think about certain fiscal incentives. And fiscal incentives, what I mean with that is fiscal benefits for both the companies that decide to attract capital through an exchange, but also fiscal benefits for the investors that invest into such a company, and that through a securities exchange get certain income. Again, too long to get into real details during this presentation, but there are things that we have to think about. A funny thing is, and I want to mention this here, you see the largest business of all is Curacao. Yes, indeed, that's our largest business. I'm of the opinion, and I must say that I'm extremely happy to hear that our Minister of Economic Development subscribes to this, and as a matter of fact, he called it himself the Nos Pueblo bonds. What I mean with that is Curacao-owned companies. In other words, the Aqualectras and the Puros and the whatevers of this world. I'm of the opinion that whenever they need financing, they should offer a portion of their financing needs to us, to you and me. For obvious reasons, it allows us to invest in our own companies. It creates a good feeling. It allows us to get a little bit more interest than we would normally, a little bit more, let's say, financial gain than we get only on our savings accounts. And I think the sense of belonging to a certain company that is owned by all of us is a good thing. Clearly, the fact that Mayo blesses this is a very positive sign. It does not mean that it will happen tomorrow, because of course there are always legal issues that have to be looked at. But together with the government and the central bank, we will definitely pursue this further and see what can be done here. Very quickly, because I see the time is flying. A good capital market will definitely increase the possibilities for economic growth. And I'll go to the next one immediately. A couple of things that a listing on a security exchange will bring that are positive, and that will lead to, let's say, a really fired up market, is that it forces the issuer, the company that is looking for the capital, to constantly track its own success and to constantly enhance what we've mentioned before: financial governance and reporting to the investors. It also, once the market is really moving, the market itself will constantly inform the public of potential investments. So you get a much more active public when it comes to what portions of the economy it wants to support. To finish, a short graph that looks a little complicated, but basically is not. And I have to thank our colleague, Mrs. Martina, who produced this in one of our writings that we do in our educational program. But basically, what this shows you, and it's the blue, let's say the blue area on the right, horizontally you have the financial development index, and on the other side you have the effect on the growth rate. And so the question is, how much do you have to have your financial services sector, your financial market in a country developed to be able to reach a certain growth? Here you see it. It's somewhere between let's say, the index has to be somewhere between the 0.4 and the 0.7 to try to reach a maximum of around 4 to 5% of growth. All pretty theoretical, of course, but the important thing is that in these studies, every country that is in that area has shown to have a fairly good working capital market and securities exchange. And I think that's important for us to take away from this little chart. You need that. You really need that to be able to work towards a certain growth. Last but not least, the and again, you know, because of time, of course, we can get into a lot of details, but SMEs, small and mid-sized companies all over the world, and especially also in Curacao, you have to become aware of the possibilities of financing yourself through an exchange. We in Curacao with the DCSX have focused on being not only a securities exchange, but being a very affordable securities exchange, because one of the big issues worldwide is that a lot of securities exchanges are so incredibly expensive that for small and mid-sized enterprises, it's absolutely not doable. It's just they simply cannot afford it. Sorry about that. A final note, and this is really, more a personal note than necessarily the view of the DCSX. I really can't wait to see a further symbiosis, you know, melting together of crowdfunding platforms and of the whole process of digitalization or tokenization of assets, if you want to call that. Because in the end, I think where it will lead is that everything that has a certain value should be able to become tradable one way or the other. And once you reach that, you have really reached the point of a certain democratization of finance. And with that, I would like to close. Thank you for your attention. And of course, here you see my contact details at the DCSX. Anybody who wants to ever discuss something or exchange ideas, more than welcome. Okay, thank you very much. I think that with this, Diana, the next speaker is going to be yourself.
Going to be me, yes.
Yes, indeed. Thank you.
Okay. Hi, everyone. Thanks for being here. Thanks, Renee, for this explanation. Of course, besides our costs that are very efficient, we also have a process that is very efficient and, if you want to say, fast and very easy to understand. So I have here a single slide that we show you all the process and in a summarized way for you to see that it's very simple. And of course, at the end, I can answer questions about it. So what is the first step you need to have if you are an issuer, a company that wishes to list with us? So the first step is to find a listing advisor and a broker. A listing advisor is abbreviated as LAT. So I will refer as a LAT for listing advisors. So the partner selection is vital in this process. And we, in our website, we have all the lists of our approved and authorized listing advisors and brokers, so you can check their background and choose wisely. Because everything must come through this LAT. The DCSX do not have direct contact with the issuer, so the LAT will be and act as a coordinator between you and the exchange at all times, before for questions, during the listing process and application, and during the listed entity. It's live as a listed entity. So it's very important you choose someone who you trust and who has obviously the background you need. The LAT also, we will be accountable for the correctness and compliance of all your information and documentation that has been brought to our exchange. So that's important too, to comply with our requirements. And the LAT ensures that the issuer fulfills its transparency requirements we and the international standards require. And what is the broker? The broker is the one who facilitates the buying and the selling of the listed securities. If the securities are tradable, I want to make a difference here. We in the exchange have two types of listing. The technical listings that do not trade, buy and sell, and the tradable listings that are securities that are tradable. It can be equity, bonds, or funds. So this is important for you to know. The second step is the listing documents. When the right partners are chosen, the next step includes the preparation for the listing. And this is also done with the issuer and with the LAT. At this stage, the LAT together with the issuer need to team up to agree on the general structure. That is very important because that is the base for the prospectus or the information memorandum. You need to understand that in case of a public offering, it's called prospectus or information memorandum. And in case that is a private placement, it's called circular. And in that case, you issue first and then list. That's another difference. So what is a prospectus? A prospectus is a detailed information document with all the information about the company, the securities listed, and the related risks and projections of the issuance. That is very important. So basically, it's a detailed business plan. Who is the company, why, and how they expect their success, what are the funds are needed for, and how the investor will be remunerated. That is very important for the investor. So the prospectus must be complete and very understandable for them. Another part of the listing documents you need to prepare with your LAT are the KYC information and documentation. So, Fernanda, I think I'm gonna mute you because you are on, your mic is not off. Okay. Okay, so we continue. During this stage, the KYC information is vital. So the LAT should ensure that it gathers all the required legal and financial documents from the issuer to comply with our listing requirements. At this stage, the DCSX is not officially involved yet. So it is up to the LAT to ensure everything is ready and in accordance with our listing requirements to start the application registration process. So when everything is ready, all the required documentation must be sent to our contact details. So with the application letter, with some forms we require, and then we can start the process. How do we start it? Reviewing internally. The documentation and the information of the prospectus is reviewed by us, and we need to provide the LAT with our feedback, indicating whether the received documentation are in line with our requirements. If they are not, we ask them to complete them. And then when we receive the complete documentation and the IM that is in line with our requirements, all of this package is sent to a listing committee conforming 3 members, and they review it. They have 10 business days to provide their comments, suggestions, questions, inquiries, everything for them to be ready to provide their approval. And these all must be addressed by the LAT. So when the package is complete and compliant with our requirements, the listing committee is ready to grant their approval. So if the approval is for a technical listing, it just will be appearing on our market section of our website. But if it's a tradable listing, we go, I forgot to, okay, to a roadshow. What is a roadshow? On tradable listings, the broker together with the LAT and the issuer may team up to make a roadshow to promote the tradable listing to interested parties like investors, general public, institutional, professional investors, depending on the structure and strategy they made at the first steps. So after this, it goes to the custodian. The custodian for tradable listings is our depository. It's called Vidanova Custody Foundation, and the listed securities should be dematerialized for the clearance settlement in this custody house. This process must be completed within the 6 months after the approval of the listing. And it's very important because all the securities are dematerialized there and held there in the broker's account. So another step, and is the fun step, is the listing ceremony. It is optional for the issuer to celebrate hitting the gong to celebrate its listing. So it's another step I included because for our Chinese clients, this is a very important one. And finally, the trading in the marketplace. How do you do it? And this is brought by many questions usually. If the listing is approved for tradability, the broker will offer the access to its trading platform that is connected to our trading platform in order for the clients to sell and buy their listed securities. Now, unlike popular beliefs, the DCSX do not offer direct access to investors on its trading platform. So all investors must have a brokerage account with our authorized and approved brokers. That is very important for you to know. So the account of the investors is with the broker, not with the DCSX. The DCSX offers its trading platform for the brokers to use, and our brokers are connected to it. So we don't have direct contact either with the issuers or the investors. So the issuer must have its LAT, and the investors obviously must address its broker. So the LAT is the representative of the issuer when dealing with the exchange. During their lifetime as listed entities, companies are required always to communicate us, the DCSX, key information about their company, the market, any information of material importance for the investor. So we will be receiving this information through the LAT. And this is all to meet the investor's expectations in terms of transparency. So, as mentioned before, the DCSX is internationally oriented and looking forward for opportunities in the global market. Our trading platform was launched on February 1 last year, offering our brokers a digital platform for trading. Along with the core business of an exchange, matching the offering and demand of capital, listing securities can be used also as a wealth planning, privacy, and tax optimization tool. If you want to be part of the DCSX as an issuer, as an investor, as a broker, or as an investor, you can contact me. I will leave my details, my contact details, so you can ask me questions, or in the chat box also you can ask for them. So I invite you all to visit also our website. We have many information there and our social media too, to check our listing requirements in full detail. Our listing fees, our advantage is our low cost compared to other exchanges. Also, our LAT requirements to be approved as an authorized LAT. Also, the member broker requirements and general rules that we have to play this game fairly for all the participants. And also, we have many publications with our educational program with financial education about capital markets. So thank you very much. And if you, let me check if anyone has asked any questions. Thanks. It is a power. Okay, I will answer those questions at the end, and we continue with Errol. Thank you very much.
Well, thank you. I'll share my screen. Give me 1 second, please. Okay, good morning. Thank you for the introduction, and thanks for inviting the Central Bank to be part of this Learn2Grow conference. My title of my presentation will be Capital Market Development, Option or Necessity. I will leave it up to you guys to determine after my presentation whether it's an option or a real necessity to develop our capital market. Today we're going to discuss, Today we're going to discuss the role that we play in creating a vibrant capital market, where the financial capital market is the source of our pulsating economy, and where the beats of our market attracts global businesses, investors, and innovators to participate in our market. Local capital markets are critical to accelerating the sustainable economic growth needed to enhance prosperity, reduce poverty, and foster resilience. Furthermore, capital markets also promote strong transparency and governance, and they provide diversified sources of investments. Looking ahead, capital markets need to play an even bigger role by mobilizing more private capital for key sectors with financing needs, such as infrastructures, SMEs, creative and innovative projects, and other potential new economic pillars. Unfortunately, the countries of Curacao and St. Martin, like many developing countries, are not reaping and enjoying these benefits, as their local capital markets remain small and lightly active. So today, I will discuss the importance of the development of our capital market, the role of the central bank in this development, and the critical elements needed to build a sustainable, vibrant, future-proof, and resilient economy. So to sum it up, we all play an equally important role to achieve this. So I'll be sharing two interesting statements. Okay, first, because of the love affair between the public and the capital market. One second. Yes, so because of the love affair between the public and the market, it is possible for entrepreneurs and creative minds to get financing. So capital markets can be significant sources of financing and play an integral role in the economic growth. So more liquid markets reduce the disincentives to investing in long duration projects, which in turn spurs innovation. It is therefore that we need to put in place the conditions for this love affair to happen. Okay, secondly, the capital market is one of the most important drivers for economic development and growth. So I want to quote Kesserer and Rapp, who argue that the availability of funds for long-term risky investments combined with the incentives for improving corporate governance result in the real growth rate in GDP. So they estimate that growing capital markets by 1/3 would increase the long-term growth rate in per capita GDP by about 20%. So underscoring the need to dedicate the needed time and resources to capital market development. So our agenda for today, I'm going to provide a general overview of our capital market, the objectives of the central bank in the development in this capital market, some general information pertaining to supervision and the DCSX in particular. We're going to talk about the supervisory regime, the supervisory scope, and our approach as central bank. And then I'm going to provide some concluding remarks. So let's go through some key elements of a sound capital market. So the effective flow of funds between savers, borrowers, and investors requires the existence of a modern and efficient financial system comprising of specialist financial institutions, instruments, and markets. So financial markets perform various functions which conducted efficiently help to boost economic growth and living standards. So their objective is to bring together borrowers and lenders. So the financial system comprises of different types of institutions and markets, so each fulfilling their specialized roles. So banks and similar institutions tend to intermediate the bulk of lending and are expected to continue to perform that role. Capital markets, on the other hand, allow borrowers, both public and private, whose credit worthiness is more easily accessible to obtain funds directly without the involvement of an intermediary. So when we talk about the financial system, we generally have both banks and markets in mind. So without some form of vigilant external oversight, the system can fall prey to excessive risk-taking and moral hazard. So financial markets exist for the benefit of the economy and extension the end users. To sum up, effective regulation, so the role of a central bank leads to capital market development. Capital market development in turn leads to economic growth. Economic growth improves our standards of living in a number of ways, including reducing poverty, promoting savings, investing, innovation, and job creation. So a little bit of an overview of capital markets in Curaçao and Sint Maarten. So the capital market in Curaçao and Sint Maarten has remained a bit shallow and underdeveloped as a result of a lack of secondary market conditions and local retail investors' participation. So what this means is we need to create a more vibrant secondary market, where the bulk of investors could directly participate in this capital market. Furthermore, the capital market in Curaçao and Sint Maarten has potential for growth, and opportunities to create a vibrant financial market with a global focus. We're going to talk about, the focus of, this vibrant market. For a dynamic and ever-evolving market segment, a different approach is warranted than mature market segments. So what we mean by this is you have some mature market segments, for example, the banking sector, the insurance sector, the pension fund sector, and the approach for developing this capital market needs to be, of growth and not of, of keeping what we have in place. So to provide you with some general information, so the objectives of the central bank is first and foremost to maintain the stability of the value of our currency, to promote and ensure a safe and efficient payment system, but also to promote and maintain a sound financial system in Curaçao and Sint Maarten. And there is where we're going to focus today. So some general information. So we have relevant national ordinances, so laws, that provide the central bank with a mandate to supervise and regulate the financial sector. So we have the national ordinances, governing supervision of securities exchanges, the one governing supervision of investment institutions and administrators, the one governing supervision of securities intermediaries and asset management companies, and the one governing supervision of banking and other credit institutions. The supervision of DCSX is governed by the NOSI. We call it the NOSI, National Ordinance on the Supervision of Securities Exchanges. The central bank is entrusted with the ongoing supervision of the DCSX. And just for, for the public, the DCSX has obtained its license to operate as a licensed and supervised securities exchange in Curaçao and for Sint Maarten since 2010. So we have been working together for, the good part of 10 years now. So the main objectives of the NOSI is to ensure the adequate functioning of our securities market and to protect potential investors on the securities exchange. And a secondary, very important objective of our legislation is to preserve and foster the reputation of the countries of Curaçao and Sint Maarten as a sound, transparent, and reputable financial center. So exerting the effective and measured supervision. This is so important for us to be vibrant, for us to attract international businesses, international investors, and international innovators. We need to preserve and foster the reputation of transparency and reliability. So when we talk about supervisory regimes, this is basically international standards that we have to abide to, when we supervise, securities exchanges such as the DCSX. The focus is on first, the organization of the exchange. So the quality of the technical infrastructure is of utmost relevance and importance. Yes, because the exchange is a marketplace, you know, where we bring together investors and providers of capital. So we need to be a very capable, on the technology side and on the security side. So to protect against cybersecurity and all of those kind of risks that such a platform is affected by. Then the internal regulations of the exchange is very important. So there must be rules that guarantee transparency, disclosure, fair trade, and complaints handling in place. So that's what we make sure that we have this good communication with the DCSX that basically ensures all of that is in place. And then we need to foster proper relationship between the market participants on the exchange. So ensuring preventive measures against unfair practices, such as inside information and other market manipulation practices. So what's the capital market regulatory scope? From a financial stability objective, the objective is, create as much transparency and efficiency in our markets. We are going to discuss, the effects of, a transparent and efficient markets in a bit. So from a financial stability point of view, we need transparency and efficiency. Okay, from a financial soundness objective, we need to be able to manage disruption and failures of entity, except for exchanges, okay? Because basically, when you have an exchange, there's no way back. You cannot, the exchange, the DCSX, cannot fail, because that would be too big of a hit for our financial system. Then from a relevance perspective, and in this case, investor protection objective, we need to guarantee transparency. We need to guarantee proper disclosure of information for investors to make well-informed decisions. And we need to take into account and ensure fit and proper. What do we mean by this? Is we need to make sure that market providers, service providers, know what they're doing, know what they're talking, and know how to provide investors with the needed services. And what capital markets favor, and this is kind of a contradiction of or a difference between capital markets and traditional banking markets and insurance and traditional markets. The capital market favors transparency for investors to trust the market. For businesses to trust the market, there needs to be a lot of information. So and good information and quality information. So confidentiality for capital markets is a no-no. And a key tool for supervision is the enforcement action. So less ratios and capital requirements, more of enforcement actions to make sure that transparency and transparency and disclosure requirements are met. Okay, now we're going to talk about the capital market supervisory approach of the central bank. Okay, we talked about the principles of international standard setting bodies, and rules and recommendations that we as a jurisdiction need to comply with and adhere to, and the central bank as the gatekeeper of those principles and recommendations. But now we're going to basically discuss what we as central bank do. What's our strategy right now with capital market development. So our strategy now is of growth and expansion. So we need to work together with all our stakeholders to ensure that our capital market further develops and grows, because at the end of the day, there is no matured economy that has grown or expanded without the trigger of a good and developed capital market. So that's our strategy right now. And what we expect as a result of the strategy, maybe down the road, medium term or long term. First, enhanced national and international visibility, recognition, and reputation of our capital market infrastructure. So we need to work together to build that infrastructure for the needed international recognition. Proper and comprehensive investor protection framework. That's part of consumer protection requirements, of disclosure of information, of transparency. So we need to put in place comprehensive frameworks, and that's already on the way, and we already have a lot of those in place. We need to ensure a better function local capital market that is aligned with the global capital market. We are part of this global financial system, so we need to make sure that our market, is aligned with the global market. And we've already taken a lot of steps, towards that goal. From the central bank's part and also from the DCSX part, you see a lot of DCSX, alignment with regional and global securities exchanges frameworks. So this is already on the way, and the prime objective is the creation of a more attractive location for international financial institutions with a more dynamic and vibrant capital market. Rene already alluded to the vibrance of this capital market. I again underscore that we need not only a just functioning capital market, we need a vibrant capital market where basically you can feel the pulsating economy in our market. So I cannot underscore enough why the vibrance of this capital strategy is of utmost importance. Why is this? Because this attracts more quality jobs, resulting in a positive contribution to economic growth, prosperity, and financial well-being, not only on a jurisdictional level, but on a business level and also on a household level. The challenges, no development, no objective, comes without challenges. So there are systemic challenges inherent to capital markets, and challenges that we actually need to work on. And as you can see, they're called systemic. Why is that? Because those challenges are responsibility of everyone. So all stakeholders have the responsibilities to face and lower those challenges. So first of all, especially as a small jurisdiction, conflict of interest, that affects the reputation and market integrity. So we all need to work on measures and policies and frameworks to counter, conflict of interest. And if there are conflict of interest, make sure that those conflicts are disclosed. So that's one. The second one, weaknesses in our market function, which affect economic growth and development. So we need all of us. So we are equally important in this equation. All of us need to, take the weaknesses in the market out of the market function for our market to be, considered vibrant. Economic conditions. And Rene also alluded to the chicken and the egg, story. Economic conditions affect regional and global positioning and resiliency. However, we can together, developing our capital market counter, economic conditions that are not ideal. So this is an area where we all can contribute to make the economic conditions better, and consequently position our capital market and our jurisdiction regionally and globally. One very important aspect of the challenges that we need to face also is our regulatory, but especially legal and judicial capacity, which affects our enforcement and market integrity. So without judicial capacity or legal capacity, there is enforcement lags behind, which undermines the market integrity part. So we all need to make sure that our legal system, it has the capacity to deal with a vibrant capital market. And greed, this affects competitiveness and proper function of our markets. So this whole greed thing and conflict of interest and working not in the general interest, but in one's own interest, we need to make sure that we know that a well-functioning capital market at the end of the day, positively affects everyone. So we need to take this greed out of the equation and make sure that we're all on the same page of a general good functioning capital market, where each and every one of us reaps the benefit of that. So I have some concluding remarks. The capital market is a dynamic sector in its developing stage. That's very important. So there is a lot of potential for growth and further development. The capital market development is of utmost relevance for economic growth. We already mentioned, the correlation between capital market development and the GDP. So we need to work on that. Market-based financing spurs creativity and innovation. Yes. So this is a very important part. We need more independent and more creative, more innovative companies to come to Curacao or to establish here in Curacao or to basically to birth here in Curacao for us to be waymakers in this whole region and to attract direct foreign investments. Furthermore, this creativity and innovation create new economic pillars and diversify and strengthen our economy. So not only because it creates income or generates income for a group or a group of persons. This whole creativity and innovation development outburst, if I can call it, creates new economic pillars. Okay, we can become a creative or innovation hub. We can our DCSX could basically be our Americas and Caribbean hub for as a platform to set up investors and creative minds. So this is a very important part of developing our market, our capital market infrastructure. And last but not least, financial education and literacy is a necessary tool to aid capital market development. As we already heard from previous speakers, we need to get more financially capable and knowledgeable and literate about what the capital market means for the economy, but also what the DCSX as a securities exchange can mean for businesses, startups, for creativity, innovation, and just as a marketplace and a meeting place between capital providers and innovative minds. So with that, I want to conclude my presentation. If there's any questions, I'm willing to, I'm available to answer those questions. And I want to thank the DCSX for inviting me and giving me the opportunity to present.
Okay, I assume that I will continue right away. Thank you, Errol, for your presentation. I'm going to share mine very quickly here. Share screen. Okay, I'm assuming everybody can see this. All right, so I've been asked to talk a little bit about the business case of Curacao Heritage Fund and our experiences and lessons learned. And I will communicate as well towards the end of this presentation a little bit some opportunities for improvement going forward. So first of all, you know, we obviously went through an entire process of evaluating whether listing on the DCSX would be a sound business case. And I think in that process, we considered the following factors, you know, of the amount of liquidity that's in the market with pension funds and insurance companies, and other financial institutions. An interesting part that a lot of us already know is that most of the pension and insurance assets have a requirement of investing 60% of this liquidity into the local market. And after 2007, you know, we had a situation where a lot of the government bonds from the government of Curacao and the Netherlands Antilles, the former Netherlands Antilles, were basically paid off by the Netherlands. So there was a lot of liquidity flowing back into, you know, these pension funds, and that obviously had to be invested in local opportunities. So these investable assets at one point in time, you know, I estimated totaled over $5 billion that are with pension funds and insurance companies in the Dutch Caribbean, of which 60% again had to be invested in local opportunities. But obviously, in such a small scale economy like ours, you know, we also saw that there were very few local investment opportunities for this amount of liquidity. So what we also understood from our process of assessing is that institutional investors, because they were so accustomed to these government bonds in the past, were more inclined from a risk point of view as well to stay with the fixed income type securities for investment purposes. And I think also simply there was less of a equity market developed because of this in our local markets for that purpose. I mean, it was clear that after 2010, you know, with also some activity picking up with the DCSX, that you know, new local opportunities had to develop and structured so that they could fit the needs of the growing investment appetite, local investment appetite of the pension funds and insurance companies. So I think we were one of the first ones with the issuance of the bonds for Building Depot in 2016 to list a local private company's fixed income securities on the DCSX. You could see that. I won't go too much into this because that's the topic of my next speaker, which is Mrs. Justice Martins, who will talk more about this very eventful time in the exchange is history, and of course our local financial market. So, you know, in short, you know, what we also considered is something that has been mentioned very recently also in the Groeistrategie, a government document that was signed between the government of Netherlands and Curacao about how to make the financial markets work properly. I think this statement kind of sums it up, and also what Errol said earlier, a well-functioning capital market makes it easier for capital to flow to profitable investments. And from this point of view, the government of the Netherlands also offered the help of their outfit, but also the help of the Euronext in Amsterdam to help the DCSX locally build a more solid financial market along with the Central Bank of Curacao and Sint Maarten. Also, what we liked a lot about the possibility of listing on the DCSX was, you know, a stock market listing also has other benefits and ensures compliance, with tax payments, transparency, a topic that Errol also spoke about, things that we are not usually accustomed to because we always have a two-way relationship with our bank, and our bank obviously keeps everything secret. But transparency would be a very welcome change in our entire financial ecosystem. Also, this listing on the local exchanges would help, creating companies with better corporate governance structures, and make this institutionalized, and therefore create much more ability for value creation in these companies going forward. And to that last point, obviously, CFG, Curaçao Financial Group, we've always believed that a environment where there are more valuable companies, by definition, also creates more value for the community. So to jump into our specific case, the Curaçao Heritage Fund, we sought from the time in 2013, soon after we started Curaçao Financial Group, to set up an investment fund for the local pension funds and insurance companies to invest in. But unfortunately, that did not go through back then in 2013. But a few years afterwards, we had a very unique opportunity that came to our attention, which was the whole Pieter Maai small area in the inner city of Willemstad, where, in the year 2000, the entire neighborhood was very run down, as you can see from some of the pictures here. It was a neighborhood that was developed by a small group of private investors that bought up a lot of these, let's say, dilapidated monuments, and with subsidies from the Monument Fund here in Curaçao, and obviously a lot of help from other financial institutions and other partners, were able to, revive an entire neighborhood and make it into a vibrant, let's say, Soho of Willemstad, with boutique hotels, student accommodations, commercial office spaces, shops, restaurants, bars, clubs. I think everybody that's from Curaçao in this webinar knows Pieter Maai very well now as a hip and trendy place to go out to. But in 2017, the let's say principals of Jewel Investment, Jan Peltenberg, Anne-Marieke Holten, and Wilfred Hendriksen, decided to sell all of these restored properties that were running very well with their different functions as one bulk. And that was obviously a good timing for us to pick out our investment fund structure, real estate investment fund structure that we'd put in let's say the refrigerator for a few years, and dust it off and see what we could potentially do with this concept, in Pieter Maai. And I should say that Jan Peltenberg was extremely excited about the opportunity of consolidating all that he and his partners had built in Pieter Maai Small in one real estate fund that would be available to investors, a broad base of investors in Curaçao and the local market, to also participate in this unique, creation and development that took place in Pieter Maai. So from that point of view, we were able to get into the negotiations around July of 2017. And by the time we had reached an agreement on the price and the process of how, this would go about with setting up a real estate investment fund, we were at about November 2017 when we signed that sale purchase agreement of these properties. So if you can see on the picture, all the, let's say, the properties that are colored red, most of these properties were being considered at that time to be consolidated into the real estate investment fund. So what we did, we obviously went and started off our due diligence process, and in that process, we had some lucky moments. We discovered that there was just a very recent tax incentive introduced in the market where investing in UNESCO World Heritage properties had no zero transfer taxes due when buying properties. There were also no mortgage stamp duties due when borrowing against these properties. Equity partners that invested would enjoy a 30% tax deduction of the value of the investment that they could take against their company profit taxes, or also in their own personal income tax as well. And what was extremely interesting also were any interest that is earned on loans that are granted to monument properties and UNESCO World Heritage properties were exempted from taxes on the interest income. So that made it obviously very exciting to issue these bonds, as the interest earned on these bonds would be completely exempted from tax. Furthermore, the entity we used for the real estate investment fund was structured as a transparent company. And in a transparent company, there are 0% profit taxes due. All of the tax burden falls in the space of the investors directly. So once we were into this process, I don't know if you recall, we started this process in November 2017. Unfortunately, shortly thereafter, in February 2018, Mr. Peltenberg passes away because of complications with cancer, and so that was unfortunate. We were very happy that his other partners wanted to continue with the process, as we were well into the process for the transfer of the properties at that point in time. So then the entire, let's say, regulatory part came into play with our prospectus having been sent to the Central Bank of Curaçao and Sint Maarten, and also the DCSX for approval to list on the stock exchange. These approvals followed each other very quickly. In March, we got the approval from the central bank, let's say the waiver, to be able to raise capital from the local markets. However, the minimum investment that the central bank required was 50,000 guilders for the bonds. So that was something that we had to take into account and complete our prospectus, which was then reviewed by the DCSX and was approved in April of 2018. I think it was the 4th of April of 2018 for a listing on the exchange. Very soon after that, on the 12th of April, we distributed the prospectus of the Curaçao Heritage Fund to a broad base of institutional and private investors. And we were seeking to raise about $4.2 million in bonds. And I think we were very successful in achieving that. By May, literally 3 weeks afterwards, we had more than enough subscriptions and registrations from a total of 22 investors in the fund. So then we were able to close the transaction very quickly thereafter. By the end of May, we were able to pass the notary deed. And, you know, as you can see from the pictures, we were able to celebrate that the week after in June, the successful transfer of almost 11 million guilders worth of properties into the real estate fund, of which the bonds were listed on the DCSX. So to go about briefly the process we went through, we obviously in the preparedness stage, we did our due diligence. We analyzed all of these different factors that you see listed here for preparing a proper prospectus. And that prospectus obviously is a very key piece of document that we were able to then share it with all of the major stakeholders, in this case, the DCSX, but also, of course, the Central Bank of Curaçao and Sint Maarten. We also had to conduct a roadshow with brokers, to see if there would be sufficient appetite for them to distribute this prospectus to their investors, which they were, thank God, which also obviously helped us a lot in achieving the oversubscription with the investors. We also did separate roadshows for the investors directly in presentations that were organized together with the brokers. And then obviously we had to go through some of the processes with the central bank's custodian, in this case that's Finanova, and obviously sign agreements with our paying agent and our bond agent, who would act as a, let's say, a caretaker on behalf of bondholders to see whether we as the issuer, the Curaçao Heritage Fund, would comply with all of the agreements that were set forth in the bond agreement. To give you an idea of the timelines, you know, the preparedness took us about a month and a half. We had the prospectus done by the end of the second month. And the approvals from the DCSX and the central bank followed in the month 4 and 5 were used for roadshows, and then we were able to achieve a financial close in the 7th month. So in our, I mean, since there were very few other examples done in the local market, I think this was fair to say that you know, we were very happy with this this timeline of achieving the necessary funds of launching this fund. So, okay, then I would want to go briefly from our experience, obviously, what we think would be the ideal candidate, ideal factors for a successful listing on an exchange, and not only on a DCSX, but any kind of exchange. I believe there needs to be a level of scale that you can count on, not only as an issuer to grow your market, but a certain scale also in the DCSX and its ecosystem of brokers, investors, and regulatory body. Like I mentioned before, good growth prospects, a company or an issuer that's considering a listing. I would recommend, especially from experience, that there be a long track record of audited financial statements. A good corporate governance. We now have over 2.5 years of experience with our board of supervisory directors at the Heritage Fund, and I can say that it's been a very, very fruitful experience to be able to bounce ideas off of your board of supervisory directors and the different insights that you get as management of the fund. This is very, very invaluable, and also, of course, serves as an additional check. Also, what I would recommend very highly is what the Jamaica Stock Exchange does with their junior stock exchange. They actually have sort of a pre-listing period of almost 2 or 3 years that a company has to go through before they can actually be listed on the main stock exchange. I think this is very, very important for companies looking to list, because it prepares you on what it is to be a publicly listed company. So yeah, I mean, you know, moving from I think our local market perspective, you know, what Rene also correctly indicated earlier, we're coming from a situation where we're more accustomed to just walk to our bankers and find the best financing solution for our ideas, our companies, our projects. And so there you can see that a bank generally looks at these 3 factors as their most important factors. But once you are looking at, you know, whether you want to invest in a company as an equity investor or even as a bond holder, you know, you're going to focus on other aspects of this company. And there you see, you know, that the corporate governance, you know, the sufficient level of capital and reliable financials come more into play. And then considering what I spoke of earlier, you know, the definition of a valuable company and what scale and growth opportunities represent for something of this for a valuable company. You know, these are other factors that I think you would consider when listing on a much larger stock exchange, and if you want to have that to become a successful listing. So yeah, I think driving the development, what we're seeing now, this would be the ideal movement with the red arrow towards people changing their mindset of being a bankable company to a valuable company, and therefore a more listable company as well. So going through some of the lessons learned for us with the Curaçao Heritage Fund, we came across a number of interesting facts that it's always nice to share with people. You know, in hindsight, again, is always 2020. So from this point of view, I would say that, you know, from our opinion, there are a very limited number of companies in the Caribbean, or the Dutch Caribbean for that matter, that can go public on this exchange. You know, obviously scale plays a very important role here. But what is interesting about the DCSX is that it's an international bourse already, and it's open to many international players over the last few years. You know, we've had Chinese listings, Colombian funds have listed on the DCSX, and several others that are currently considering a listing. So there is opportunity there for DCSX to be a vibrant market, not only for local companies, but also for regional and international companies. What we found is that you know, there is still work to be done on the level of knowledge and commitment from the important stakeholders in our market. You know, we've conducted a number of these meetings and presentations and workshops, and we've also had the very good knowledge sharing with the Jamaica Stock Exchange. And there are clearly a lot of things that need to improve, you know, with our local ecosystem of a financial market before we can get to a level of as Errol mentioned, a vibrant financial market. One of the other impediments that we came across was the minimum investment of 50,000 guilders. I think this amount is too large for most of the investors that are willing to step into a financial market locally. So that's definitely something that should be modified. From what I hear from DCSX representatives, that this is indeed something that's currently being worked on, and hopefully it will be solved very soon. What we also did come across is that we have a very strong and deep knowledge of the logistics around a exchange, and that has a lot to do with our heritage of the trust sector in Curaçao. You know, so things like investor relations, stack structuring, custody services, fund accounting. You know, these are all aspects that are pretty well organized already, in my opinion, in Curaçao, which forms a very solid basis for further developing a financial market. You know, this is something that some of the other islands cannot really say for themselves, you know. Furthermore, what we saw as well in our process is that there is a lot of you know, appetite from local investors. You know, not only because they want to be part of the financial market, but they want to be part of investment that has a positive impact on their environment and their society. Did we achieve our objectives as Curaçao Heritage Fund and CFG? I think we did. If you look at the pie charts I put up over here for you to see, on the left, you'll see of the total amount that was raised from issuing bonds through the DCSX, 53% of the dollar value, so to speak, was from private investors, and less than half was from institutional investors. And the pie chart on the right of your screen, you will see that in terms of numbers, you'll see that we have almost 11 of the total of 17 bondholders were private investors, and even there, the minority are actually the institutional players in the market, the smaller pension funds, a local bank, and an insurance company. So going into, I think, the concluding slides here, like I said earlier, I think there are great opportunities to be had here in making our financial markets a vibrant place of exchange. You know, we can certainly team up with other exchanges that are more than willing to offer help in creating a more vibrant trading space for us here in Curacao. Again, you know, we've been offered on many occasions the CEO of Jamaica Stock Exchange, her help in, you know, designing specific tax incentives, helping build a more robust regulatory environment, and obviously conducting more educational related workshops where, for example, students are encouraged to join a stock market competition, and thereby learning what it is and how it is that they should be investing through the exchange. Point 4, you know, something that is currently as well under consideration with all of the new developments in Curacao. Are we going to continue with our local currency as the currency? I personally think that the US dollar as a currency for the exchange would be a very welcome development, especially if you want to attract international investors to your exchange. Also, what's playing a big role now is guarantee instruments that the Netherlands will make available for our economic sector in Curacao. I think we should use these guarantee instruments that will make it a lot easier and a lot less risk-averse investors to get into the play as well, with the guarantee instruments being employed for these investments. And of course, what I said earlier, reducing the minimum investment to about 1,000 guilders, or I should say $1,000, since I believe that the currency of the exchange should be in dollars. So I've taken it upon myself to set up a little bit of an action list. You know, this is my opinion, obviously, what should happen. More than happy to share this and discuss ideas about these steps. But I think we now, as the most important stakeholders, have to name a stock market czar, somebody that is going to have as their primary responsibility the development of the financial markets locally. I think the central bank should start by introducing a dedicated regulatory team that will be only in charge with DCSX matters, financial markets. You know, since the central bank did not establish a regulatory authority because it's such a small market, I think there should be a dedicated department within the central bank that is only focused on the DCSX. We should also work on improving tax incentives for companies that are looking to list on the DCSX. More stock market education at our universities. Start off with the simple stock market challenge. We've indicated that we'd be more than happy to partake in these and offer prize money to winning parties to make it even more exciting, that the youth of our local community get involved in this. Eliminate the local currency, also eliminate other obstacles for the free flow of capital, like license fees that to my opinion, are not really helping the process of creating a vibrant financial market. And, you know, something that was mentioned earlier by Rene, I don't know if the blessing of Mayo is enough, but I think you need to move forward and oblige all government-owned entities to be listed on the stock exchange and to comply with all of the listing requirements of the stock exchange. That gives obviously a lot more transparency what's going on in these government-owned entities that are owned by us as citizens of the country. Obviously, what I mentioned earlier, form alliances with other exchanges that are more than willing to help. And obviously improve our ecosystem, increase the number of active brokers, market makers, and maybe even get the commercial banks to be more involved in the financial market of Curaçao. And with that, obviously, you know, the last point, I think what I mentioned with respect to our new entity that's going to be set up here in Curaçao, and the IDB that helped Jamaica with building capacity for a financial market. I think we should tap into these sources as well to help us propel the DCSX to a vibrant and productive and successful stock exchange. So that was my presentation. Again, I'm more than happy to answer questions from any participants directly on my phone number. You can WhatsApp me on that number, or you can email us at CFG Value email address, and we'll be more than happy to share more thoughts with that. Thank you.
Thank you, Bharat. I think it's time for me to take over. The exchange, thank you for the invitation for today. Bharat was indeed the arranger of the two bond issues we have been working on successfully. So he is wearing more than one hat in this whole listing arena. I guess I'm the only one of the whole group that can speak only as a client, so I will try to do that this afternoon. Let me try to share my screen. So I would like to take you through some practical considerations in the listings we have done. My name is Justus Martens. I'm one of the founders and principals of the Curaçao Growth Fund. We are well, the only private equity fund in Curaçao, funded by the largest pension fund, APC, and we hold participations in a number of companies. One of these companies is Building Depot. Building Depot is active in many different retail areas and has several entities, two of which have been involved in a listing. The first of them is Building Depot Member Services, and it's now called Smart Finance at this moment. That's the financing company of Building Depot. So basically, everyone that buys a refrigerator or a sofa or has to do major reconstruction on his house can get financing from our financing company. And there's another entity called Building Depot Curaçao. That's our real estate firm. It holds all the different buildings that the company owns. So these two companies have been involved in listings over the past few years. So to start with the first one, Building Depot Member Services, that's a relatively small listing. I agree with Bharat that scale is generally important, but it's also possible from time to time to do a smaller listing. So in 2016, we were raising 9 million guilders in total for basically the financing of our customers. So really as a financing corporation. 5.8 million guilders had already been raised in a private placement. So it's a bond. So it's a financing instrument, but it's not listed. And after that private placement took place, we participated in the company with our fund, and we decided that one, we wanted to support the development of the local capital market, and two, we believed it was smart to build a public track record. So we decided to finalize the 9 million guilder raise with a 2.1 million guilder listing of a bond. So we decided to go into the market with a bond that was going to be listed at the 6.5% interest rate for a term of 4 years, and well, taking into account the 50,000 guilder minimum denomination for the bonds. This was a relatively straightforward process, and I'll get into the steps and the considerations after this, but then you know what kind of listing experience we have. Because basically there was already a group of financiers that was interested in this bond. So what we basically did is we added liquidity to the mix, and instead of doing a continued private placement, we decided to do the listing. So as a result, we could have placed 5.8 million guilders. It was oversubscribed but almost 3 times, so that was a good success, and we placed in the end the 2.1 million. Then a much bigger placement, actually the largest local placement so far in Curaçao, was in 2018 for Building Depot Curaçao, the real estate company. This was for a total of 34 million guilders, basically refinancing a traditional consortium financing we had with a number of financiers on the island. And we decided that it was a smart idea to exchange that for a listed bond instrument at 5% interest rate. So a little bit lower for 10 years, longer term, and of course also keeping in mind the 50,000 guilder minimum. And this listing, of course, was much more challenging because it was much bigger, and also the company itself is a little bit more complicated to explain than a financing corporation. So we actually succeeded in placing the whole amount, and in doing so, completing the largest ever local corporate bond issue. Now, just to become really practical, after all the considerations, mainly technical considerations you have heard from all the different speakers, I will just try to keep it rather simple from a customer's point of view, client point of view. So as a company in Curaçao, local company in Curaçao, having the choice from different financing instruments, an instant question is, why did we decide to go for a listing on the local exchange? Well, one of the reasons is the bigger reach you could have doing a listing. It's no secret that there are a number of financiers that you really need to make any financing at a larger scale a success. So whether you do a private placement or you do a consortium deal or you do a listing, you probably reach out to the same parties anyway, but then the listing actually allows you to combine these parties, so to form a group, and also to reach people and companies and institutions you would normally not reach in a traditional process. So the market is a little bit bigger than if you go for traditional financing. Then what's really important is liquidity, as was mentioned a few times. The instrument of a listed bond allows the holder of that bond to sell it at any moment if it can find a buyer. And that liquidity is really valuable for a lot of investors. So adding the liquidity makes the financing more attractive. Then what's very important for us, more flexible conditions. It's fair to say that the local banks and financiers have a certain way of looking at financing, and they apply specific conditions that are difficult to depart from, and not all of those conditions are necessary when you go into the market. So if you do not agree with all the conditions that you tend to be faced with if you do traditional financing, you choose a traditional financing solution, then doing a listing might help because you're a little bit more flexible in the choice of your conditions. And that goes together with less dependence. You're less dependent on one financier or a small group of financiers. You're reaching out to the whole market, and you're able to build a public record. So if you do one listing and hopefully more listings after that, you build something You built a record with the financiers, with the local market, and that can be used in the future for creating even more flexibility. So in the end, it was a choice for us, and this is a choice that a lot of companies in Curaçao are facing, between traditional financing or private placement or listing. And in our case, the choice was in the end to go for the listing. Now, what's very important, and you have seen this in some of the slides of the people that spoke before me, the team that you're putting together is crucial. And when you do that, you have to keep in mind a few facts of life as they are today. Any listed instrument, whether it's a bond or an equity instrument, is rather new in the local capital market. Actually, the local capital market is rather new. So this is something that there are professional people that can support you in the process, but you have to realize that not that many local listings have been done. It's a small market, so there's not that many financiers that will look at the instruments that are being listed. And there's just not enough experience to cover all situations or questions that you might have. So it's really important to make a choice for people that support you, that know as much as is known at the moment. And you need to actually select quite some entities and people to fulfill the different roles that are relevant to a listing. And I'm just going to mention the main ones in my view. And this is a practical point of view. So if you look at the listing requirements, you get some of these same roles. But if you look at a company that is starting to look at this possibility, you even need more people. So the first one I would like to mention is, you can call it, well, there's different names for all these different roles, but let's say the arranger or the financial advisor, someone that knows something about corporate finance and at the same time understands the local exchange. So that's where it starts, because that's the party that's going to help you make your analysis, that's going to help you make the right considerations, collect the right information, and in the end make the right decision in how you approach the market with what instrument and whether you're going to list or not. If the decision is to go for a bond, then you need a bond agent, someone that represents basically the bondholders in the end towards the issuer. That's a really important role. So the bond agent is another important decision. Your legal advisor is very important. You need a lawyer to put together all the documentation, and in putting together the documentation, a lot of the decision-making items will come up, and you will need advice on that from your financial advisor, but also from your lawyer. And also the auditor is important in most cases, because well, you will need audited financials, and you need to be able to present your financials in the right format. So those are for me, practically speaking, the 4 key appointments when you start considering this process. If after talking to all these advisors, you decide to go for a listing, then you have to take the decision on some more technical appointments. So the lead broker is one, the custodian, so the security agent, paying agent, listing advisor. So all of these you can choose from a number of different parties, but that I would say is in the second stage of the process. Now then, if you have your team together, what do you do after that? And the first thing that you need to do is choose your instrument. So are you looking for a financing instrument? Are you looking for equity? If you look for a financing instrument, are you going to go for traditional financing? If not, then you have to decide if you go private placement or listing. And if in the end the decision is to go for the listing of a bond, and most considerations also apply to equity, then you go to the next steps in your structuring. And the main requirements you have to, I think, consider first are what is the status of your financials? Do you have audited financials? Are your financials strong enough, clear enough to present to a public market? There's going to be the need for an information memorandum, an IM or a prospectus, and that's a serious task at hand. You need to be ready to do marketing, and there's going to be costs involved and costs that need to be negotiated. The team, as I mentioned, very important to make your final decision on who is going to help you with this. The rates, this is something that will require quite some analysis and consideration. Of course, you as a company want to go for rates as low as possible, interest rates as low as possible, but you have to weigh that against what's possible in the market, and also weigh that against your ability to raise the full amount you want to raise. Denominations, this has been mentioned a few times already. The 50,000 guilders is a bit high. It keeps some people out of the market. So you have to decide what denominations you will offer, and if in the future these denominations are also, it's possible to make them smaller, you have to take this into consideration. Then I don't want to be, don't want to sound negative, but you also need a plan B, because you have heard presentations today from people that were all successful in raising the full amount, and I think all the listings so far have been successful in that. But it is possible that you don't raise the full amount, and then you have to decide what you do then. If you then stop the issue, if you build in the flexibility to lower the amount and look for other forms of financing. So a plan B should be in place. Now then there is a very long list, and I just will mention a few so you have an idea what I'm talking about, of legal decisions that need to be taken. There's collateral that might have to be provided. There's reporting requirements. When do you do your repayments? How often? How is interest actually calculated, technically speaking? Are you allowed to do an early repayment? How are the bonds allotted to the different subscribers if there's an oversubscription? And there's, I think at least another 40 or 50 legal considerations you have to take a decision on. And then, as is the case with everything in life, timing is everything. So you have to think about the different steps, how much time they will take, when can you go to market, and does that fit into your financing needs in terms of timing. Then the implementation. So let's say you have gone through this whole process of structuring, and you have your team together, then it comes to the actual implementation of your listing. And I want to stress that this is not like taking out a loan from a bank. And there's a lot of work involved. And I want to stress for the team, but also for the issuer. So you as a company, you as a corporation, and your team, and it falls to a large extent on your financial specialist people within your company, but also the management, will be involved for a good amount of time, let's say at least 6 months, will be involved in this listing process and will have to do a lot of work themselves. You cannot leave this to the team because there's a lot of things that you have to decide as the company itself. And it starts with the term sheet, the structuring. You need to take the final decision on each of the items in the term sheet that make up the structure of your instrument. Then the information memorandum, the prospectus, will require a lot of work. You have to describe your company, your management team, the history, your financial situation, your financing needs. You need to describe the structure of the instrument. You have to describe how you're going to repay, why you're going to be able to repay. You have to talk about collateral. So it's a booklet that might run, somewhere between, I would say, 20 and 50 pages. And it has a lot of relevant information. It's very useful to go through this exercise because it forces you as a company to write everything down and to be complete, but it's demanding and it takes time. Then also there's a bond agreement. That's the legal reflection of everything you have decided to put in your instrument. And there's a lot of considerations in that bond agreement and a lot of language that needs to be discussed. If you have those two elements in place, there's going to be the marketing. You will have to do advertising. You will have to, together with the brokers, you have to reach potential investors, and you'll need to structure a roadshow where you speak to the investors and you're able to answer questions. And those questions are interesting because they're not just questions. They very often, investors will not just want to know certain things. They also might not agree with some of the decisions you have taken. And this is something where I believe the exchange still needs to do some work. It's not always clear what type of adjustments to the listing are still possible at the last moment. And this is not the last moment because someone is not prepared. This is the last moment because certain investors might say, okay, I'm interested, but you know, the interest rate is too low, or I don't like the term, or I'm not willing to accept that condition, or I want to add the condition. Now, these type of last minute changes you need to be able to make very often because not always what you had in mind and what your arranger had in mind is attractive to the market. And then different brokers have different ideas about what changes could be made. So I would recommend to the exchange to have some procedures in place on allowing last minute changes, basically facilitating last minute negotiations with local investors, and that might require small changes in the term sheet and in the information memorandum and bond agreement. Now, if you have that process completed, then the actual listing can take place, and hopefully you will find out that there's more interest in your instrument than you're looking for. So to keep it short after this long set of presentations, my advice, I can talk about this for hours if needed. So if anyone wants to have some practical experience to use for their own considerations, you can always reach out to me. But for me, the main questions, if I can give some advice, or the main takeaways are, you need to decide if you're ready, and really ask everyone you work with multiple times if they feel you are ready, because you don't want to get into this very energy consuming and also a little bit costly process if you in the end cannot make use of the listing. Second, you need to decide what you go for, debt, equity, and different instruments within these two categories. Really think about, as Renee said at the beginning, really go through that step of making the internal analysis of what is it that we're really looking for, because you're now in a capital market and the flexibility is much bigger than when you're doing traditional financing. So really take the time to analyze what you need and look for the instrument that best fits your needs. And then a warning. So a listing is not some kind of miracle solution that solves all the problems you might have in attracting traditional financing. It will add some extra capacity in the market. It's an easier way to put a group of people together that maybe otherwise would not have been able to find each other. It's a possibility to create a flexible consortium loan in the case of a bond with more flexible conditions. And it allows you to build a public record. But if your issue is that you cannot get financing because your risk profile is not attractive enough, or because you're already over leveraged, or your governance is not in place, or your financials have not been up to par over the last few years, a listing is definitely not the way to resolve those issues. You basically need to pass basically more tests than in any other type of financing is the case. So it is an interesting option, a very interesting option that you should look at, but it requires careful consideration and a very serious commitment from the company that considers this. So with this, I would like to finalize the last presentation and give it back to the exchange for moderation. Thank you.
Thank you, Justus. We are back for the Q&A. So we received internally some questions. I will speak it out loud, and then each panelist will answer it. So the first one is for Rene. Rene, are you there? Can you open your video and unmute yourself? Great. Let me put you in spotlight. The question is, how crowdfunding and the DCSX can be combined?
How crowdfunding?
How crowdfunding and the DCSX can be combined.
Yeah, you know, I think it's a very nice question, especially given the topics that we have seen coming by this morning, and this question immediately hits a few points, and that is crowdfunding is an alternative way of financing. That's one. Crowdfunding is an alternative way of financing for mostly when we talk about, let's say, real business crowdfunding, not about rewards crowdfunding or you know, philanthropic crowdfunding or real business crowdfunding. It's mostly for companies that are very small or in extremely initial stages, etc. Having said that, you might think about a combination whereby, together with, for instance, clear central bank directives or policy with the DCSX, you could create a special platform within the DCSX, whereby a crowdfunding platform that comes out of certain countries where we know that the financial markets are fairly well regulated. If a crowdfunding platform is operating there and it has a couple of projects that have been approved in that respective country, for instance, take for instance the Netherlands, the project has been approved, the project has gotten the money, so they did actually raise the money. That means that the project in itself was considered viable by a couple of investors. So the only thing that you could do there is that you say, okay, as an exchange, we are not basically accepting this listing as a pure new listing, no, but we are accepting this listing only to enable the creation of a certain liquidity of all the investors. What do I mean with that? If you have a crowdfunding project that has filled, let's say, whatever, 2 million euros, and it has 500 investors, small investors, all those investors have their position in that company, but it's extremely illiquid. You cannot sell it. You cannot give it to somebody else. If you would say, okay, for all these 500 investors, we transfer those investments that they have in that particular company to a platform where it becomes tradable, yes, then I think you can have some nice layover. But obviously, again, you know, it has to be looked upon in some more detail.
Thanks, Rene. The next question is for Errol.
Yes.
Okay, let me put in spotlight. Okay. So there are two questions. What is your perspective to develop the secondary market? You mentioned it needs to maintain its steps to develop. And is the central bank considering having a smaller denominations for bond issuances?
Yes, let me start by answering the second part of the question. Yes, as we speak, we're currently working on issuance requirements, including all that was discussed today. So the denominations, disclosure requirements, reporting requirements, and stuff like that. So yes, we are working on that, and shortly, hopefully, during the first quarter of next year, we will have that sorted out and issued. That's on one side. On the first question about developing the secondary market, and we heard a lot of input from the various perspectives, from various speakers about what is needed for us to develop a proper capital market where a secondary market development is key. So we're talking about offering and building proper market conditions, okay, for a secondary market participants. So for retail investors, like we call them, so individual investors that are able to participate in those markets. So we are already alluded to denominations. If we talk about bond issuance, we're talking about accessibility to the markets, through brokers and advisors. We're talking about knowledge, capabilities, and literacy about what such a market comprises, and the functioning of the market, and how the market can aid one's need of participating in those markets. Pricing symmetry, credit rating, all the different financial market infrastructures that that aid participation of retail investors. So that's why I was alluding to the fact that all of us are equally important in developing this market, developing a secondary market, developing participation. The DCSX is doing a great job in aiding in the financial education department, educating the public, the general public at large, about the benefits of participating in the capital market. We are doing our part in educating, the general public, making them financially literate, so that they get more knowledge about, how the market functions, how the capital market functions, the objectives, the benefits, and try in that way to make the individuals more knowledgeable on how to participate. The difference between having money at a bank and going to the market and invest the money, and the difference of risk appetite and all of that. So there's a scala of input and developments that needs to be done. And all of us separately are working on creating that cohesive strategy to push secondary conditions where it needs to be. Thank you.
Thank you, Earl. I have two other questions personally, and for me, and I will answer it right now. How long does it take to list with the DCSX? It depends. As you saw the listing process, and Bharat also helped us with this timeline. It depends on the structure, the preparation before you submit all the documentation and information memorandum to the DCSX. So that can take maybe 1 or 2 months or even more. And then the process in the DCSX can take less than a month. If everything is okay, we review it internally. We can take a couple of days, maybe 3 or 1 week, 3 days or 1 week. And then the listing committee has 10 business days to provide their approval or comments. And if they are not comments or inquires, they grant approval. So it can take very few weeks or maybe longer if the roadshow takes the offering for a month or 2 months. It depends on the structure of the listing. And about the fees, I will share that with you. It depends also on the market capitalization of the equity, and I will share that with you on another mail. So, Bharat, I have a question for you, and was repeated, so I think it's important for you to answer it. It's about the currency on the listings.
Yeah. Well, you know, the reason I mentioned that is because there is a study going to be commissioned by the Netherlands and the central bank, whether the guilder has any kind of added value as a currency in our market. So from that point of view as well, you know, I firmly believe that a US dollar using an international currency definitely creates more investment appetite from foreign investors. So that's just my basis for saying that the US dollar should be, you know, the main currency for the DCSX.
Thank you. Maybe another panelist would like to add something to this question about the currency, maybe Errol or Rene?
Yes, yes, absolutely. You know, and it's exactly a little bit like Bharat points out, and Bharat, you prepared a very nice list of, let's say, the to-do list. And one of the important things is, of course, that, and we are in discussions right now with the central bank through the CIFA organization. One of the discussions is, of course, how do you go forward with our foreign exchange regulations? You know, you have to be realistic that already we know that there are not a whole lot of, I mean, we don't have hundreds and hundreds of local companies that are, let's say, mature enough to go through the action, but we will have a few. Now, if you want to attract foreigners to invest in this, in these local companies, yes, you should allow other denominations. So to have the local company issue a denomination, for instance, a euro or a dollar. The question there becomes that as such, for the DCSX, that's not an issue. We have to check with the central bank if they allow that as such. But the question becomes, a foreign investor transfers in euros or dollars into a Curacao company. That Curacao company receives those funds and is going to convert those funds for a big part in the local market. However, that same company in due course will have to pay dividends and or interest payments or whatever back to those investors, and or those investors want to sell their position. Those type of transactions have to be, let's say, covered by a sufficiently lenient and practical foreign exchange regulation, because if not, you will not get foreign investors to invest into these companies through the DCSX.
Okay, what about euros? Why not euros instead of dollars?
The same, absolutely the same, absolutely the same. You know, and you know, the funny thing is, of course, we have quite a few Chinese listings. So I would even dare to throw in the air
Hi.
I think you have frozen, Diana. Okay, now there you are.
Okay. Okay, thanks, Rene. I have another question regarding NGOs. Let me search for it. Okay.
What's the question?
Is this form of search for investment, DCSX as a marketplace, search for capital, also viable for NGOs? And to continue, I was wondering if there is no specific return objective, but the NGOs still needs to raise capital, and this can be a platform to do that. Investors may still invest because of possible social responsibility or added value for their community. That's a comment.
Yeah, I can react on that if you want. The absolutely as such it is possible. The only thing you have to realize there is that a listing like that, while of course it's done to attract capital, it's not done to give the investor, at least in a lot of cases, it's not done to give the investor certain assurances with respect to returns on his investment. So what you will have there is that basically you accept a listing like that purely to create liquidity for the investor who has invested into that NGO project and who after a certain stage says, okay, you know what, I'm going to try to sell my position. But so yes, in principle, I don't see why we could not entertain those.
Okay, I have a question regarding governmental bonds, and maybe Errol, you can help us with that because the central bank has a position there. The listing of governmental bonds.
Yeah. What's the question, please?
What is the process for the government when it wants to issue bonds through the security market?
No, yes, you know, for government bonds, there's a, you know, different set of requirements, you know, the central bank is the agent for the government. So the bonds, you know, are issued with the assistance of the central bank. And, you know, especially now where you have a situation where the Netherlands, you know, purchases all the you know, does a standing purchase of government bonds, you know, it's, you know, the conditions are not there for government bonds to be issued through the DCSX still. You know, that doesn't mean that in the future, you know, those conditions can change, and it makes it possible for government bonds to be delisted and issued through the DCSX. Thank you.
Thank you, Errol. We can conclude the webinar right now. Thank you for being here, the panelists, the attendees. This is live streaming Facebook. You can see it on demand later. And thank you all for attending. Have a nice weekend.